looks like it's 7 o'clock, and so I guess we will get the show on the road. And for all that have joined us this morning, we're thankful and grateful that you're here. Hope you get some good information this morning, which I would lay a good bet you do, because there's a lot of things going on in agriculture at this moment in time with the markets and different things and issues. But with that said, I want to first off, thank our sponsors, the Cotton Board, Texas Corn Producers Board, and Texas Sorghum Producers Board. And they have been kind enough to sponsor this program so that we can bring it to you without any fees attached. So with that said, going to turn it over to Dr. John Robinson, who's the cotton marketing specialist, and let him give us his update. So take it over, John. Dr. John.
All right. Hopefully, there we go. Hopefully you're seeing my full screen.
We are.
All right. So the cotton market update. We're at the time of the year when the discussion typically turns to planted acreage. And so within the last, about 2 weeks ago, we had what I consider to be sort of the first milestone guesstimate of planted acreage, and that's the Cotton Grower magazine. They do a survey from across the belt, and they publish it at the Beltwide Cotton Conference, which was a couple weeks ago in San Antonio. And they came up with an estimate of there's the regional breakdowns, but the big number is 12.5 million. I liked that estimate for a couple of reasons, or I agree with that estimate for a couple of reasons. One was there were a couple other Outlook presentations at Beltwide, and they independently came up with about the same number. And I myself, considering just the question of, what's the price of cotton compared to the price of corn, and historically, what level of acreage does that give us? Using that kind of an exercise, that would have steered me to guess that we'd had 12 or 12.5 million. I think that's about our base, our minimum level. I think we could go higher than that. And the reason I think we could go higher than that is because of two things. One is this is December 22 cotton futures, and they're up here at a high level. I think the South Texas insurance price was established, what is today? Anyway, it's established from the averages of these prices from December 15th to January 15th, which would put us right in there with an average insurance price of in the lower 90s, which is historically pretty dang high. And when you combine that with how dry things are, we were just talking on the call how dry things are in the upper coast, and if you go inland and go northwest, they get even drier. Typically, in those kinds of conditions, combined with a high insurance price, would induce a whole lot of cottonseed being put in the ground with a big question mark on it. So, we'll have to see what happens. We could plant 13 million because of the combination of all these forces. We could plant over 13 million, but the higher we go, I think would be accompanied with higher and higher abandonment. So I'm thinking we'll probably plant 12.5 to 13. And then nobody knows, the expectations are it's going to be tough and we may have high abandonment, but, last year it started raining in May and June all over the place, and we had a larger crop than people thought. So we'll have to see what Mother Nature gives us. It is a setup, and here's my main point. All of this is a setup for a big weather market, the kind of market where we don't know how much we're going to produce, and that uncertainty creates a lot of price volatility, including high price volatility. So I think that's what we're in store for. So this far right column is my guesstimate of the new crop supply and demand numbers. Here's my 12.5 million planted. I'm assuming we're only going to harvest whatever that is, 20, or we'll harvest 82% of that, giving us about, and what that is that is the average abandonment in La Nina dry winters for the last 5 La Nina dry winters, throwing out the worst one, which was 2011. That leaves us nationally with 18% abandonment. That would give us 10.25 million acres harvested. This yield here is also a 5-year average dry year kind of yield, throwing out the worst one. That may seem a little high to you, but you got to consider that yield implies that a whole bunch of dry land in West Texas fails, and leaving you with irrigated yields and delta yields and southeastern yields pulling up the average. Anyway, we get that, the combination of all that give us an 18.25 million bale crop, which is pretty strong. And adding in what gets carried in, that would give us a 21.5 million bale supply, which is pretty healthy. You know, it's on par with the previous couple of years. So then we have some assumptions about this is how much mill use in the United States. I'm assuming 2.6 million, kind of keeping with the recent trend of recovery and assuming that we don't have anything else that upsets the economy. And same with the export number. I'm assuming that no new pandemic strain breaks out, and I'm assuming that central banks don't raise interest rates too much and slow things down. So making all those assumptions, the bottom line, and this is the number that people should always focus on, what's left over is the main driver of prices. If the leftovers, USDA calls them ending stocks, I call them leftovers. If the leftovers are big and growing compared to last year, then we expect weaker prices. All right, these leftovers are not big. Less than 4 million bales is, I'd say, modestly tight, and it's a little higher than last year, but not too much higher. So my conclusion to this is, you know, with these projected leftovers for the current marketing year, we've had prices in the 80s, 90s, and over $1. If we came up with this, I would fully expect we'd have prices ranging from the upper 80s, you know, through the 90s. So I'd say 85 cents to $1 is sort of the fundamental trading range that I would expect from an outcome like that. Now, we still could have prices. I mentioned the weather market situation. We could have prices pushed higher, at least temporarily, through the growing season, and that would be because of the influence of speculative buying, which is an influence on all our markets, the corn market too. And it's an influence that particularly happens within the season. These, what I'm calling hedge fund speculators, will kind of jump on a bandwagon every season, and they'll make a bet that the crop is either bigger or smaller than people were previously thinking, and they'll buy the crop higher or they'll sell the crop lower. And so during the growing season, you see these typical upward spikes. That's an increase in, I don't know, 20, 30, 40,000 cotton futures contracts that these guys are buying, and that kind of effect pulls the price up. The distance from here to here is like 15 cents. Well, you see these kinds of upward spikes all the time, and they happen every growing season. What I submit to you is that why wouldn't they happen more this growing season? Just because we're in that kind of year. It's a weather market. There's a lot of uncertainty. You know, those hedge fund managers are going to be reading news articles about how dry it is, and they're going to be watching all the USDA indicators, and they're going to be paying attention to all the acres reports, et cetera, et cetera. So I fully expect if this gives us, you know, 85 cents to $1, these guys could give us $1.05 or $1.10 or $1.15 or even higher. But again, I'll point to how skinny these little spikes are. If they do push prices up over $1, I don't expect that effect to last very long. I think it'll be temporary when it happens, and I expect it to happen. Now, so this is kind of a summary of what I'm saying. I was about to say anything can happen, and you know, anything can. I was looking at Twitter the other day, and there was a gentleman on Twitter who was actually referring to me, saying I was being too boring and conservative about it, and he expected prices to go to $1.50 if things got really bad with the drought. And I'm thinking to myself, well, I don't think that's going to happen, but you know, I won't say it won't. What I expect is most reasonable to happen is what I've already stated. A fundamental price range between 85 and $1, and the funds can push it up another 10, 15, 20 cents easy. But again, don't expect those kind of speculative buying. Don't expect that kind of influence to last all the way to harvest. It comes and goes. And it's going to be confined probably till about the period from now through August. Now, is there downside risk? Yeah, there is. Think back on 2021. People thought they were in a drought. People in West Texas thought they were in a drought. And then it started raining unexpectedly. And then they said, well, there's too much rain. The crop is a month late. It'll never make it to the finish line. And then the conditions in August, September, and October were pretty good. And it did make it to the finish line. So, stranger things have happened. So we could put a lot of seed in the ground and have great conditions, in which case we'd have a bigger supply, and that would pressure prices to the lower end of the range. Things get back to normal, then prices will matter more, and prices will ration between us and our competitors. And usually the U.S. ends up holding the bag and having a bunch of cotton in the loan and that sort of deal. And so that could pressure prices a little bit. And then anything that slows GDP could pressure prices a little bit, like an unexpected wave of pandemic effects, or the Federal Reserve slowing things with high interest rates. So we'll have to see. Bob, I'm going to need to get off and go to my next meeting here in a second. So if anybody has a question, they can email me up here, or they could ask Dr. Welch or Christi.
Thank you, Dr. Robinson. As usual, good information, and we greatly appreciate you getting up and getting on with us this morning, and hope you have a good rest of the day.
Yeah, thank you very much.
Fair north.
Yeah.
Also, this morning, I also want to recognize Matt Boucher, who's the county extension agent in Victoria County, and he's on here most of the time with us, and so he's a co-host, and we kind of put this thing together as a team. So just wanted to recognize him as well. So I guess we'll turn it over now to Dr. Mark Welch. He's our grain and grain specialist with our extension grain specialist, and Dr. Welch, if you want to take it away.
All right. Good to be with you this morning. Let me hang on there and make sure you can see my screen, Bob, if you would. Let's go to the.
Yes, I can.
Correct. And we're looking okay there.
Yes, sir.
Of the touch a lot of the same factors that Dr. Robinson was talking about in the cotton market. Yes, we're already having that discussion of, what's this acreage shakeout going to do this year? And if we look at the influences of the grain price, yeah, we could talk about some of the demand factors, exports and domestic use. And I think we're going to see some competition, particularly in that export market. We'll talk about that in just a second. But, what is that area question going to be when we talk about grains for 2022? And much of that will be a concern about yield, given how dry it is in many areas. But I think the big question will be that returns from competing crops. What influence will that have on the acres that go to grain? And of course, one key component of that is that, particularly when it comes to corn, we're talking about a crop that's much more highly intensive in its use of nitrogen fertilizer compared to some of the others. And we got high prices otherwise too, as we were just talking about the high prices in cotton. Soybeans are still relatively high. And so those particularly, competing with our grain markets and how that might shape up and influence the decisions that we'll have going into 2022. Here's an update of kind of what's going on in the fertilizer situation. These prices are tracking this kind of a national price for anhydrous ammonia, which is basically a proxy for nitrogen fertilizer. And we are seeing all-time record high prices when we're looking at anhydrous and nitrogen. These are prices that are tracked out of Illinois, and USDA provides updates of these prices and other fertilizer products every 2 weeks. So we'll get a couple of these during January, and then we'll track those through the year. And you can see the strong increase we've seen in anhydrous ammonia from September, particularly. Of course, we're going up all year, but particularly that leap we made from late in the fall in September, now up just below $1,500 a ton. I guess the good news would be that rate of growth has slowed just a little bit. And perhaps we're seeing some indication that we've seen the peak in that market. We'll get more information again over the next few weeks, get closer to spring, but it does look a little more positive. And then another influencing factor, not the key determining factor, but an influencing factor, is that the primary input component to make anhydrous ammonia and ammonia fertilizer is natural gas. And if nothing else, natural gas prices have come down substantially over the last couple of months. And the information from the Energy Information Administration is that those prices are expected to continue between that $3 and $4 per thousand cubic feet for the next several months and into 2022. So if we have a moderating impact of natural gas prices, that should help. But another key influencing factor on the price of fertilizer is the price of grain. And we look at corn in particular, and we see high corn prices. That tends to put upward momentum and upward pressure on fertilizer prices also. And corn prices are still relatively high. We'll talk about put that perspective in just a moment also, but yet moderating to some degree, holding kind of steady as we're at this point looking ahead to 2022. So again, those upward pressures for prices would appear to be moderating to some degree, and I think we're starting to see that reflected in our fertilizer prices, which is definitely good news for on the input side for farmers looking at making those applications this spring. We'll see how that plays out, but it does appear there are the factors that are driving those prices higher are moderating to some degree. Another thing that we're watching very closely is, of course, production in South America. We're talking about soybean production. We're starting harvest now in much of Brazil. But I think key for the grain markets, in particular corn directly, is that as the center part of the country, you'll see in the Mato Grosso region, Mato Grosso do Sul, as they harvest their soybeans in the areas, this is where they come back and double crop with corn. So their second crop corn is the one that's primarily the export competition that we see here in the United States. And the heart of the planting season for that second crop is in February, and then we'll start seeing harvest of that crop come out in June and July. So I want you to kind of keep those timeframes in mind just a little bit. We're going to look at some seasonal patterns of the December corn contract, and I think we'll see perhaps how this crop cycle in South America may influence what we see many times in the price activity and price movements here and for grains here in the U.S. So that's one that the market is certainly going to pay much more attention to. They've been relatively dry in the southern portions of Brazil and into Argentina, but again, the primary corn production is more in the central to the south central regions of the country, and we're just getting into the planting season for that particular crop. Updates to the supply and demand situation in the U.S. and the December WASDE. There were just a few minor changes. One is that we raised the production number. USDA did not change the yield for the 21 crop, but they did raise the planted and harvested acres, which gave us a small increase in production. They did raise domestic use slightly. However, they lowered our export expectations or estimates for this current marketing year. And what I've done is I've lined up that December WASDE information here in this column to the long-range projections that USDA put out in November. Now, we'll get updates on this information in February. These are not official estimates of what USDA thinks the year will bring, but based on normal weather patterns and kind of trends that we've seen develop in the markets, these would be kind of a baseline expectation. And I think the key point in terms of our price expectations coming from these kind of numbers is that if we could see fewer planted acres, but yet see a trend line yield, if yields are normal and relatively strong, these would be really good yields, even with a slight decrease in corn acres next year, with a larger amount of carryover stocks. So the grain left over from last year growing by some 250 million bushels compared to the year before, relatively small change in production. We start to build that supply that we'll have available in that new crop marketing year. And currently, the use estimates don't indicate a lot of growth, but much of that will depend on the level of export competition. And so if our competitors, if they make a crop, again, given the acreage expectations, get an era of high prices, they're going to seek to boost their production also. So if we keep our use levels about the same and see these relatively even moderate levels of increase in supply, it starts to put an increase on that stocks to use ratio, or that days of use on hand at the end of the marketing year. How much can we live next year on the pile of grain that was left over last year? And we could go from that 38-day supply, perhaps back up to a 47, 48-day supply. And that tends to start then again, putting some downward pressure on prices. Just to put that in perspective, if you look at the relationship between that days of use on hand at the end of the marketing year and the average cash price paid to farmers, when we get below that 40-day supply, that curve starts to bend up just a little bit, starts to get run a little more steeply. If we drop below 40, it tends to flatten out just a little bit. And the current, using those numbers from USDA and the current WASDE, showing about a 38-day carryover. If we increase that into, say, the mid 40s, again, you can see the influence that would typically have in terms of a downward pressure on prices. Still relatively strong, between $4.50 and $5 a bushel, but yet down from where we've been in this last marketing year. And again, in context of these very high input prices, that becomes a bit of a concern. And I think something we certainly need to keep our eye on and prepare for as we develop our marketing plans for 2022. Some good news in grain sorghum. Of course, this is sorghum and corn prices together going back to 1989. Obviously, they're going to move together with grain sorghum accounting for about 2% of our feed grain supply, and corn the dominant feed grain market. But yet we've seen a significant premium of grain sorghum, the red line, relative to corn over the last couple of years. That changed a little bit as we got into harvest this summer and into the fall. And now we're seeing grain sorghum once again with strong export interest from China, driving once again that premium relative to corn. The latest numbers we have are back in November, and we'll get updates in the next few weeks on more current price activity. But we are seeing grain sorghum once again trading at a premium to corn. And of course, that's very positive for our grain sorghum producers. So in addition to the run up we've had in prices, that they've had a premium even relative to corn over this last year and a half or so. That red dotted line, those would be the seasonal pattern of that December corn futures contract. And you can kind of see how that would tend to drift higher as we get from January up until about mid to late June. And then we typically see that the peak would come in that contract, crosses the halfway point or the average price of the year sometime in mid-July. Then we typically see our harvest lows back in September, October. And in the last few years, we've had a very strong rally off those harvest time lows as the contract has gone to expiration. But you can kind of relate to the uncertainty and the factors that we'll be watching in the corn market, lines up pretty well with these seasonal tendencies. We're talking about the question about acres, the competition that's out there with these high prices, high input prices. What's that going to do to that acreage mix as corn and grain sorghum compete with these other crops? We talk about the production in South America, that by the time we kind of know what our acreage situation is here in the U.S., we get our acreage report from USDA at the end of June. We're also at the heart of the harvest season of Brazil, which is our major export competitor in the world. We're right at the heart of their grain harvest. So if they've increased their acres and they've made a crop, and we get a little more clarity on what the U.S. planted acres are, by the time we get into late June, we've got at least a pretty good handle on how that crop is developing, and the weather forecasts come with a little more reliability for how we're going to head into the tasseling and silking season that's right around the country, those very critical growing points for our corn crop in the U.S. So much of the production questions tend to create some clarity. Now, if there are challenges and issues, yes, we can continue to go higher, just like we did last year. But the resolution of those questions typically comes with downside price pressure. So those are the kind of things as we're building a marketing plan. I think it's just we're to be cognizant of that. Those will be the typical market reactions as that information unfolds as we go through the growing season. So just my kind of bullet points of kind of what I think the grain market in particular for 2022. Absolutely, we've got to manage these higher input costs. Are they manageable with these higher prices? In most degrees, yes. It takes a yield, and with dry conditions, of course, that creates some real concerns. But as Dr. Robinson mentioned, our insurance prices for cotton are certainly at relatively high levels. And if these continue, we'll see the same thing in our grain markets. I think our corn acres hold steady. We may give up a little bit to soybeans in this current environment, but with the trend line yield, our production numbers could still be very strong. Domestic use, there doesn't appear to be a lot that's going to change that landscape. And then when it comes to exports, how big is that foreign crop going to be? With high prices, their incentives are to increase acres as well. And so it'll depend on the weather, which is the final bullet point of this list. I do see a moderate increase in the U.S. corn stocks to use, that days of use on hand. If that moves up moderately, I think that could put some moderately downward pressure on prices as we go through the year. And again, continually track the global economy. If the economy around the world continues to increase, that's very positive. Positive economic activity around the world is good for our exports for food, for feed, for fuel, throw in fiber. That it's positive for U.S. agriculture. And of course, trade is absolutely critical. That the disputes, disruptions, uncertainty around that, the less of that, the better. And perhaps new trade agreements or new associations, certainly positive for U.S. agriculture. But the trade question, that export piece, I think will really highlight the use patterns and be able to have a strong degree on that demand side of the balance sheet for most of our grains in the next year. But obviously then the incentives are there to increase the acres, but what will the weather allow when it comes to productivity from those acres that we plant? So that's all I have to share with you this morning. Appreciate the time. If there's any questions or comments, be glad to take those, and always good to be with you. Thanks.
Again, Dr. Welch, appreciate you being on this morning, and as usual, a lot of good information, and we appreciate you bringing that to us this morning. So next up, our guest today is Christi Short, who is the Regional Communications Manager for the Cotton Board. And we're always glad to have our guests on to give us updates going on with their organization or their boards. And today's no exception. And so with that said, Christi, thanks for being with us this morning, getting up, and I'll turn it over to you.
Thanks, Bobby, and good morning, everybody. Thank you for the opportunity to join. I'm going to share my screen. It's always hard to follow such real meaty information-packed presentations, but hopefully I will be able to give you guys a little bit of a preview into some of the things that we're hoping to have for 2022. Like Bobby said, my name is Christi Short. I am our Southwest Regional Communications Manager at the Cotton Board, and I'm going to give you just kind of a brief overview of some of our stakeholder outreach that we have planned for the first quarter of 2022. So as a reminder, I always like to kind of give just a brief overview again of who we are at the Cotton Board. We're the research and promotion program. Some people might, identify a little bit more with a checkoff program. Board of directors govern the Cotton Board. We collect that per bale assessment that's on every bale of upland cotton ginned in the United States. We also have an importer assessment. We communicate with stakeholders, with growers, what the program is doing on their behalf. And then we contract with Cotton Incorporated, and they're really the entity that kind of carries out the program. They conduct research, whether it's on farm, in mill, maybe it's working with textile mills, research companies. They promote cotton to consumers. They also promote cotton to brands and retailers to use in their merchandise. They actually create that demand and profitability that we have. And then of course we have USDA oversight since we're a research and promotion program. They govern the program. So we have to adhere to any type of rules or regulations they have with marketing, what kind of comments we can put out. And all of our research has to be third-party verified before we can release any statements. So essentially at the Cotton Board, like I mentioned, we have those three main functions: collecting the assessment, the collection of those funds, administering the program, the oversight of Cotton Incorporated, and stakeholder communication. So that's a really exciting role that I like playing, is getting to communicate with stakeholders. So my territory covers the Southwest. So the stakeholders I get to visit with are there in South Texas, East Texas, Central Texas, and then I go out west. And I think that's a wonderful area in Texas and West to visit with growers. So that assessment, again, is on every bale of cotton that is harvested, of upland cotton, excuse me, that is harvested and ginned in the United States. There is also an assessment on the cotton content of products that are imported back into the United States. So for growers, this is really exciting because it gives you a partner in the research and promotion program. The importers, the brands and retailers, the people that are selling your product, they're a partner with you in this program. They're financially invested, as well as having some programming that is developed specifically for importers, brands, and retailers on education of why cotton is the best product to be making their products out of. So within those assessments and collections, we like to kind of give a 5-year average, if you will, on what some of our numbers are. And these are some new numbers we've just pulled from our compliance department after the fall of 2021. So you can kind of see the breakdown there is a little over half of producer assessments and about 46% of importer assessments. So this really kind of shows you, again, the value of that partnership you growers have in the importer assessments. It's a pretty strong percentage number of where our collections come from. And we're really proud to say that we have over a 99% compliance rate. We have a wonderful compliance department that every year is kind of charged with finding those handlers or those areas that maybe we are lacking a little bit. And most of the time it's just maybe cotton hasn't been finished ginning in that area. So we're really excited to have such a wonderful compliance rate at the Cotton Research and Promotion Program. We passed in August of 2021, the budget for 2022 and the key strategy areas and priorities for Cotton Incorporated. So we're both governed by a board of directors who have wonderful insight to our budget, to our key strategy areas, things that we should focus on. And so in August of 2022, we passed a budget for Cotton Incorporated of $82 million. And what's really exciting about this is that it's an increase from 2021. As it's, I'm sure, no surprise to anybody on the call, the last couple of years have just been, a little bit of a struggle in a variety of areas, social climate, the global climate, the ag climate. We've had a decrease in that budget over the last 2 years. However, 2022 is an increase from those last 2 years. So this is really exciting for us that we're able to fund this program at such a high level, and that we can continue to do that because our compliance rate is high. Our financial departments manage those funds very well. So even in a year like we had in 2020, we didn't have to significantly cut budgets so extreme that staffing was cut or that the return on investment we were giving producers was cut. But likewise, we're very excited to be able to increase this budget for Cotton Incorporated to carry out the program on your behalf. Like I mentioned, both companies are have a board of directors. I want to show you this fun photo of all of our board of directors on the cotton board. So we are governed by both of our stakeholders, cotton producers as well as importers. So you can see here, our importers are made up of brands and retailers, mills, manufacturers. Our cotton producers are from all over the cotton belt. Each state is allocated a certain amount of board seats based on the production acres in their particular state. So it's very representative of where, cotton is produced across the cotton belt. And then, of course, we have 3 advisors that serve a variety of roles on the board. Cotton Incorporated is governed solely by cotton producers. Again, their seats are allocated based on production in each particular state. So at the Cotton Board with our stakeholder communication, we really want to make sure that we are transparent to you guys as growers as well as importers, but what your dollars are being used for, what it is that we're working on your behalf. This is a big project that we've been working on about the last year, kind of an initiative from the USDA to really make sure that our stakeholder transparency is available to you guys. So we've been working on some really neat website redesigns, places where you can link some of this information very quickly, find what you want. So more to come on that later this year. However, I have a few things I want to share with you, some activities that we're doing specifically on your behalf that we'd love for you to join us. We also hope later this year, we're working on some new consumer marketing projects at Cotton Incorporated, of course, in ag research. So just more to stay tuned as 2020 kind of ramps back up. 2022 ramps back up. So we have a variety of producer outreach tactics that we utilize every year. Of course, advertising, digital media advertising, social media continues to be a huge piece of our outreach tactic. We like to have in-person events, of course, but we've also over the last 2 years been able to utilize virtual events that have been quite successful, and how we can integrate those into even having some in-person events. And then there's 4 regional communication managers across the Cotton Belt, where we are really your contact, your tool, if you will, to the research and promotion program, give presentations, farm visits. We'd love to just visit with you on the farm. We're love to speak at local meetings. We do 2 major trade shows every year, the Mid-South Farm and Gin Show and the Lubbock Gin Show, which we're excited. Both of those events are going to be back in person this year. So we're really looking forward to having, a larger in-person presence out there with our stakeholders and with our growers. So if there's anything you would like for me to come speak at, I'd love to do that. We are also so excited to have our producer tour program back in person this year after almost a 2-year hiatus of pausing this program. This is really the shining star of the research and promotion program. I can talk all day long about what the wonderful staff at Cotton Incorporated is doing on your behalf, but if I can take you up to North Carolina and show you what they're actually doing, that's the best way for you to see your dollars at work. We like to host 2 tours every spring, one in February and one in March, and a women's tour every June. So you can see the dates here on the screen, and I'd love to take you and your spouse or your partner up to North Carolina, tour you through the facility. We also get to hear from a commercial spinning mill there on the East Coast about their operation, sustainability in the supply chain, how they source different cotton across the belt, and what their customers are looking for, and how that ultimately impacts you guys as the growers. So we're really excited to have these tours back in person. Again, I'd love to take you on one of them if the dates work for you. We are looking forward to hosting them again every spring like we normally do in February, March, and June. We also, the kind of a role in this stakeholder communication and transparency that's been a part of the program since its inception is the state support program. And some of you guys on the call might be familiar with this. This is where our research team, our ag research team at Cotton Incorporated, assists state committee members to find research projects that are specific to each state, specific to each region, and they fund those projects based, on this committee's assessment of how those meet cotton growers, goals in the area. So we allocate 7.5% of all assessments to go towards these localized state support research programs. So a lot of times these researchers are going to be Texas A&M AgriLife researchers here in Texas, extension agents, universities, private entities, USDA researchers, etc. And we financially want to invest in their research that's going to benefit you guys as cotton growers, specifically in your region. So each state has a different way that they make up their committee, but the committee seats are definitely filled by our board members and Cotton Incorporated board members, so those growers that are in your state. And they meet with these researchers, they meet with Cotton Incorporated staff, and producer organizations in your state to go over research projects that are submitted, and they determine which ones they want to fund in their area. We are doing, this was a program that we actually started last year in 2021, where at the beginning of the year, we give kind of a brief Zoom overview, if you will, of what some of the projects are relevant to you guys in your area. So this is a really great tool for us to reach growers that maybe we aren't reaching normally at some other meetings. So next Friday, January 28th at 7:30 a.m. Central, we are going to have a brief Zoom update for you guys in East, Central, and South Texas to go over the state support program funds that are allocated in your specific area. So we're going to talk about a couple of projects, again, kind of high level, just an overview of what we're working on your behalf. We want you to know what we're working on. Dr. Galen Morgan, who is the Ag and Environmental Research staff member at Cotton Incorporated that manages the state support funds in Texas, is going to be giving that brief update this Friday. We're going to have the Texas update for the South Plains, Rolling Plains, in the panhandle of Texas. So we've decided, Texas is such a big state, we're going to kind of split it up and make sure you guys are hearing something specific to you. So anyways, I would love to have you guys join us on the Zoom call next Friday. If you want to send me a text, send me an email, I will be sure to send you the Zoom link to join. It should just be about 30 to 40 minutes for you to just hear a brief update of what we are doing on your behalf down there in South Texas on the research projects that are hopefully going to benefit your operation. Another program that was born out of the pandemic was our Cotton and Coffee series, where on the third Tuesday of every month, we have a brief Zoom call, just kind of updating you on what is going on in the research and promotion program. We have featured some consumer marketing projects, our denim recycling project, ag research projects, the U.S. Cotton Trust Protocol, economic updates, etc. And we are going to continue these for season 3 this year on the third Tuesday of every month as well. We just had one yesterday, I guess, and it was wonderful. We have another Cotton and Coffee coming up in February, where we're going to go over the Cotton Incorporated efforts in Asia. So it is going to be really interesting to hear from that Asia office, what they hear from mills, brands, retailers over there, and how they play a role in creating that profitability and demand for cotton and cotton products. So again, would love for you to join us on this call February 15th for our Cotton and Coffee. It'll be very interesting. William always gives a wonderful presentation. So send me a text or an email, and I'd be happy to send you the Zoom link for that as well. The last thing I will mention is every year, one of our best print media that we send out is the Cotton Board Industry Calendar. Hopefully you all have received that in the mail back in December, but this has been something that everybody asks us about. I think we start getting calendar requests in August, and we just never, have it printed that early. But we love featuring beautiful cotton photos and imagery. We always have a contest on social media for somebody's photo to be featured in the calendar. But we have mailed these out in December. If you haven't received one, let me know, and I'd be happy to mail you one. We like to feature, dates that we know of meetings happening all across the Cotton Belt. And we also are so fortunate that we have some wonderful calendar sponsors that help offset the printing and the mailing for this. So it's really such a great outreach tool for us to mail something to all the cotton growers and stakeholders and partners in the industry. And we thank all of our sponsors. I have them listed up on this slide. But anyways, our calendars have gone out. If you haven't received one, let me know, and I'd be happy to send it to you. So again, thank you guys for the opportunity to share a little bit this morning about what we're doing at the Cotton Board, and more things to come in 2022 of some of the projects and initiatives that we have working on. And thanks, Bobby, for the invitation. So that's all I have this morning.
Thank you, Christy. If I can get my computer to unmute, but we greatly, again, appreciate you getting up and being with us this morning. A lot of good information has transpired, and it's good to know how all of the board and all of its functions and how it all fits into the big game. So again, thank you for being with us this morning, and for Dr. Welch, Dr. Robinson, Matt Bochet, any of our guests, we appreciate you being on, and I guess we're done. Matt, you got anything you want to bring?
No, sir. Good morning, everybody. Have a great day.
Y'all too. Thank you much. Good to be with you.
Bye.
Thank you very much.
Yes, y'all have a good one.